Carrie Chris is 6 p.m. Time for CBX Business News. The Business News Headlines is brought to you by CBX Wealth Management, making more possible.
VMIL's big bets, IMF's warning, and U.S. rates at 10-month low. Hello, and welcome to CBX Business News for Wednesday, September 10, 2025. I am Rochelle Moncrief. Thanks for joining us. Coming up in the newscast, locally, VM Investments Limited targets regional growth and digital assets in its 2025 strategy, even as markets remain flat. On the regional front, the IMF warns Curaçao and Sint Maarten that revenue reform and risk management are key to sustainable growth. And over on the global stage, U.S. mortgage rates fall to a 10-month low, driven by expectations of Federal Reserve cuts. Stay tuned as we unpack these stories and more right after the break.
Wealth is not simply counted in dollars or cents, but in the time we spend with love, in love, giving love. Wealth is not simply a means to an end. It is the means to live out loud. Wealth is more than money. It's about family, the memories you create, the legacy you leave behind, and your ability to enjoy life in the moment. It's also about seeing the QMAX possibilities and seizing investment opportunities to achieve the future you want and deserve. Which is why QMAX Wealth will focus on your investments so you can experience more. Because true wealth is truly more. To start investing today, call 876-926-7767.
Caribbean flavors and fragrances. We started out as a small family-owned business, and now we're a part of a large group of companies. Being listed on the stock exchange allows us a certain prestige. It also speaks to accountability and transparency. We had some fears about getting our information in the public domain, but once we contacted the Jamaica Stock Exchange, who have the knowledge and the experience to guide us, we were comfortable with getting into the process. If you have any doubts about being listed, just give the Jamaica Stock Exchange a call. They'll be very happy to take you through the process and also provide you with information that you may need. Make that call now.
To open a savings account for my son John. I really want him to start saving and managing his own money.
And I need for Safe to visit my father in New York.
Okay, based on what you said and our risk assessment, he will qualify for simplified customer due diligence requirements. I'll need your ID, proof of income, TRN, and John's ID as well.
Okay, here you go.
Opening an account is easier than you think using simplified customer due diligence requirements, also called CDD.
The local news is brought to you by Darriman Trading, better from the start. Development Bank of Jamaica, facilitating economic growth and development. Caribbean flavors and fragrances, tease the senses. And Pulse Investments.
welcome back to CBX News. We begin with investment news. VM Investments Limited (VMIL) is charting an aggressive growth path across the Caribbean, betting on real estate, private equity, and digital assets. At the company's investor briefing on Tuesday, VMIL CEO Resworth Burchinson outlined a growth agenda that includes regional expansion, a new real estate fund, and a deeper investment in digital solutions to enhance client services.
We want to accelerate our asset management platform. By regional expansion, we're going to Barbados, but we certainly will not stop there. We have plans to form a real estate development fund. That's going to be very exciting when it's launched. We also want to ensure that we build out our digital platform, right? Our digital platform is towards ensuring that we build operational efficiency and that in our wealth management business that we bring self-serve. Self-serve is primarily to ensure that we deliver an amazing service to our customers.
Looking ahead, VMIL points to private equity and digital assets as critical growth drivers to reshape the investment landscape.
Digital assets is an emerging trend. People, when I say digital assets, person may mention cryptocurrency. Now, that's not necessarily so. It's a much wider thing than just cryptocurrency. So we want to play a role. That's the next evolution of the asset management space. Encourage persons who are interested to go out and do your research. And then there's a need for alternative investments in the Caribbean. When you look across the length and breadth of the Caribbean, the level of infrastructure requirements, alternative investments will play a role in bridging that gap.
But that optimism comes with caution. While Jamaica's economy is posting stronger GDP growth and a stable inflation, Mr. Burchinson says the capital markets remain flat with muted equity and bond trading.
So we all know that the macro environment is interesting. So while the macro numbers are heading in the right direction, GDP growth, current account deficit, fiscal numbers, inflation, we're seeing the economic numbers heading in the right direction. Nonetheless, the investment markets have been muted. Very flat equity market, I would say a very soft capital market, bond trading not as exciting as pre-COVID. So there is that transmission to be made between a robust macro environment and investment market.
That was VMIL CEO Resworth Burchinson. Jamaica's external buffers remain firm, with the Bank of Jamaica reporting that net international reserves closed August at US $6.15 billion, edging up slightly from US $6.11 billion in July. The increase reflects stability in the country's foreign assets, which climbed to US $6.18 billion, while liabilities to the IMF were unchanged at US $29 million. This performance pushed reserves coverage to just over 50 weeks of projected goods imports, more than quadruple the traditional benchmark of 12 weeks, considered adequate for small open economies. The central bank's data also show the monetary base dipped modestly month over month to Jamaican $407.4 billion, down from $416.5 billion in July, largely due to changes in net domestic assets and open market operations. The strong reserve position underscores Jamaica's continued fiscal and external resilience, even as global uncertainties and domestic demand pressures persist. And Mayberry Group is pushing back against market sentiment, telling shareholders its stock is trading far below its true value, even as the company prepares to cash in on an international fintech deal with Nasdaq ties. At its annual general meeting recently, Group CEO Gary Peart says the stocks are trading at a discount of nearly 40%, which he described as a screaming buy.
The net book value of our business, of our company, is $12.59. And the stock is currently trading at $7.75. It is actually, the Mayberry Group is probably the only financial company that's trading at such a significant discount to its net asset value. And this is a screaming buy signal, because what it means is that if tomorrow morning we sell off all the assets of the company and pay out all of our expenses in the company, we would receive $12.59 in our hand. And it means that the people who are buying the stock now are potentially buying the stock with that upside. You have approximately $5 in upside gains. Yeah. So what you're seeing is that the stock is trading at an almost 40% discount.
Mayberry also unveiled a high-stakes bet outside Jamaica. Through its private equity arm, the group has invested in Kio World, a fintech company now set to take over American Express's international credit card portfolio. The transaction is being executed through Maha Capital, a vehicle with links to the NASDAQ.
So Kio got an opportunity to take over the credit card business of American Express. Because American Express is retreating out of the credit card business for all their customers outside of North America. And basically, Kio has partnered with, for a better word, a hedge fund, and they have identified a shell company that was previously being traded on a NASDAQ Europe exchange. That's called Maha Capital. And what has happened is that they have concluded an arrangement where Kio will get a certain amount of shares from this new entity, where the funding will be used to basically take over that credit card business of American Express. Kio will benefit two ways. Kio has its own proprietary software, which they will use, so they will earn a fee as that business grows. And then also, Kio gets a one-time distribution of shares for what they bring to the table.
Management says the structure of the deal could effectively double Mayberry's original investment immediately, with further upside once Kio scales its operations.
We have a decision to be made whether those shares will be liquidated for cash or those shares will be distributed to the shareholders as shares. What's important is that there are different valuations on what those shares could be. Obviously, if you take the shares and after the business starts, it starts to trade higher, you get more value. At this point in time, the calculated value of this additional investment is equal to our original investment. So if we invested $10, the amount of shares in Maha that we would get as Mayberry would be equivalent to that original $10. So in essence, you would get 100% return immediately on your investment.
That was CEO of Mayberry Group Limited, Gary Peart. We go now to updates from the Bank of Jamaica on how the currency markets traded today. In Wednesday's trading session, the US dollar is selling for $161.44. The Canadian remains unchanged at $116.69. The pound sterling for $219.46, while the going rate for the euro is $189.82. We now move to the latest on how the JSE equities markets traded today. In Wednesday's trading session, the JSE market activity resulted in the trading of 104 stocks, of which 41 advanced, 43 declined, and 20 traded firm. Leading the winners are Pulse Investments, General Accident Insurance Company, JA, Caribbean Producers Jamaica, and G West Corporation ordinary shares. While leading the losers are 138 Student Living, Jamaica Variable Preference, JFP Limited, ISP Finance Services, and Sagicor Real Estate X Fund. The main index advanced by 157.76 points or 0.05% to close at 317,798.14 points. The junior market index declined by 0.81 points or 0.02% to close at 3,406.34 points.
And it's time for Market Education Feature, brought to you by CariCris, Regional Ratings, Global Standard.
In today's Market Education Feature, we will be explaining the term disinvestment. Disinvestment is the process where an organization or government sells or liquidates an asset or subsidiary. But it isn't limited to outright sales. In some cases, it can also mean scaling back capital expenditure, reallocating funds from less productive ventures to areas with stronger potential. The overarching goal is simple: maximize the return on investments from capital assets, labor, and infrastructure. This can take the form of selling assets, spinning off subsidiaries, or cutting spending plans. And while financial efficiency is usually the driver, disinvestment can also be shaped by political or legal considerations. In short, disinvestment is about freeing up resources to ensure money and effort are working in the most productive way possible.
The Market Education Feature was brought to you by CariCris, Regional Ratings, Global Standards.
And that's it for the local news segment. Please stay with us. The regional news is up next.
The local news is brought to you by Diamond Trading, better from the start. Development Bank of Jamaica, facilitating economic growth and development. Caribbean flavors and fragrances, tease the senses, and Pulse Investments.
Welcome back. And now for the regional business news. Curaçao and St. Martin are riding a tourism high, but the International Monetary Fund is warning that the boom alone won't secure their future. In its latest Article 4 review, the IMF says urgent revenue reforms and stronger risk management are needed to protect growth and business confidence. Rondine Williams has more in this report.
Curaçao and St. Martin are basking in the glow of a tourism boom. The International Monetary Fund IMF says both economies expanded strongly last year. Curaçao by 5% and St. Martin by 3.3%, driven by record stay of arrivals and construction projects. But in its 2025 Article 4 consultation, the IMF warns that the celebration cannot last without urgent fiscal reform. The fund argues that while tourism receipts are up, so too are structural pressures that threaten the economic outlook. For Curaçao, the key challenge is healthcare and pensions. Annual deficits in the healthcare fund remains unsustainable, and pension costs are set to rise as the population ages. To create fiscal space, the IMF is urging the government to move ahead with a value-added tax, modernize tax administration, and broaden the contributor base. St. Martin faces a different test. With fund investments winding down, the IMF says new sources of revenue must be found. It points to a planned tourism levy, casino taxation, dividend taxes, and tighter compliance for short-term rentals. Without these measures, critical infrastructure and social investments could be left underfunded. The fund also flagged mounting business risks. A sharper than expected global slowdown or trade shock could quickly erode tourism earnings, while Curaçao's mortgage-driven construction surge risks overheating the real estate market. And across both territories, persistent labor informality and skill gaps threaten competitiveness. Still, the IMF sees opportunity if reforms are embraced. Faster execution of infrastructure projects, expansion into renewable energy, and digitalized permitting systems could attract new investment and diversify growth beyond tourism. The bottom line, Curaçao and Sint Maarten are riding the high on tourism, but unless governments act quickly to mobilize revenue and manage risks, today's boom could turn into tomorrow's imbalance. Rondine Williams for CBX News.
Thanks, Rondine. The International Trade Center, together with the Africa Business Council, the CARICOM Private Sector Organization, and Afreximbank, is keeping Africa-Caribbean business ties in sharp focus at the Intra-African Trade Fair now underway in Algiers. At a high-level side event on Monday, leaders and entrepreneurs from both regions turned the spotlight on small and medium-sized enterprises as the driving force behind a new era of Africa-Caribbean trade. The session built on the momentum of Active 2025 in Grenada, where more than US $300 million in deals were struck earlier this year. Organizers say the challenge now is to scale those opportunities, tackling tariff and non-tariff barriers, improving logistics and connectivity, and leveraging digital platforms to strengthen value chains. Despite centuries of shared ties, current trade remains thin. Less than 2.5% of Caribbean exports reach Africa, and under 0.5% of African exports go to the Caribbean. But ITC and Afreximbank analysis suggests more than US $2.1 billion in untapped potential by 2029 in sectors such as processed food, creative industries, minerals, manufactured goods, and tourism. And in a move that breaks with decades of central banking orthodoxy, Trinidad and Tobago's new central bank governor, Larry Howai, has declared that foreign exchange stability, not inflation, will be his top policy trigger. At his first major media engagement, Howai says he was writing a different textbook, arguing that in an economy as import-dependent as Trinidad and Tobago, foreign exchange is the foundation on which everything else rests.
Central banks have a couple of mandates around inflation, growth and unemployment, and so on. But I decided I'm going to write a different textbook. I always tell my managers, my textbook different. I think foreign exchange, without foreign exchange, all the rest of stuff wouldn't matter. And I think I would like to make foreign exchange, the triggers for foreign exchange, probably the bigger trigger as far as determining the kind of policy decisions we want to make. And if in fact a higher interest rate here, does, both in TT and in US, helps the foreign exchange position, I would want to consider how I might be able to use that, those triggers to achieve what I need to achieve.
Trinidad and Tobago's central bank governor, Larry Howai. It's now time for news from the Trinidad and Tobago Stock Exchange. Overall market activity resulted from trading in 20 securities, of which 5 advanced, 8 declined, and 7 traded firm. Today's winners are Prestige Holdings, Guardian Holdings, Scotiabank Trinidad and Tobago, and Unilever Caribbean, while leading the losers are Guardian Media, National Enterprises, JMMB Group, and Trinidad and Tobago NGL. Trading activity resulted in the following movements. The All-TNT Index declined by 0.88 points to close at 1,428.28. The composite index declined by 2.08 points to close at 992.94. The cross-listed index declined by 0.48 points to close at 73.81. The SME index remained at 99.20. And we take a short break, but please do stay with us. The international news segment is up next.
So much book you need for high school?
I'll show you how to make sure you have all the money for my books and even some extra. It's called budgeting, Dad. Making a budget is the most important thing you can do to track your money. It keeps a record of how much you make, how much you spend, where you spend it, and most importantly, how much you can save. Write down all your income, write down all your expenses, see where you can cut down and allot more money to more important things, like saving.
Welcome back and thanks for staying with us. In the international news today, the average interest rate on 30-year fixed-rate mortgages with conforming loan balances $806,500 or less in the U.S. fell sharply to 6.49% for the week ending September 5, dropping down from 6.64% the previous week, according to the Mortgage Bankers Association. This marks the lowest level since October 2024, as mortgage rates tracked a decline in Treasury yields following a weaker than expected U.S. jobs report. The labor market data has strengthened investor expectations that the Federal Reserve will resume interest rate cuts at its meeting later this month. The 15 basis point drop offers some relief to prospective home buyers after months of elevated borrowing costs and could help spur a modest rebound in housing market activity. China's Consumer Price Index, CPI, fell 0.4% year-over-year in August, marking the sharpest decline since February and the fifth instance of consumer deflation so far in 2025. The drop was deeper than market expectations of a 0.2% fall and followed a flat reading in July, underscoring persistent disinflationary pressures in the world's second largest economy. The decline was largely driven by a 4.3% plunge in food prices, the steepest in nearly 4 years, compared to a 1.6% drop in July. Pork prices saw a particularly sharp fall amid ample supply, low production costs, and a sluggish demand, contributing to broad-based food deflation. In contrast, non-food inflation accelerated to 0.5% from 0.3% in July, helped by Beijing's consumer goods subsidies. Modest price gains were recorded in housing, 0.1%, clothing 1.8% up from 1.7%, healthcare 0.9% up from 0.5%, and education up 1% from 0.9%. Meanwhile, transportation costs continued to decline, but at a slower pace, down 2.4% versus 3.1%. Core inflation, which excludes volatile food and energy prices, rose 0.9% year-over-year, the highest in 18 months, after a 0.8% gain in July. On a monthly basis, CPI was unchanged, missing forecasts of a 0.1% rise and down from 0.4% in the prior month. WTI crude oil futures rose above $63 per barrel on Wednesday, extending gains for the third straight session, driven by concerns of potential supply disruptions amid rising Middle East tensions. The Israeli military reported striking Hamas leadership in Doha, Qatar, marking a further escalation of its ongoing campaign across the Middle East. The attack came just hours after Israel warned it was preparing to strike Gaza City. This geopolitical tension added to bullish pressure from OPEC Plus's modest production increase for October, which was much smaller than previous months. Meanwhile, reports indicate that the US President Donald Trump has urged the EU to impose 100% tariffs on Chinese and Indian goods to pressure Russian President Vladimir Putin, with the US signaling it could implement similar measures. Separately, industry data showed that US crude oil stocks rose by 1.3 million barrels last week, following a 0.6 million barrel increase the previous week. US producer prices unexpectedly fell 0.01% month over month in August, marking the first monthly decline in 4 months and signaling cooling inflation pressures at the wholesale level. The drop followed a downwardly revised 0.7% increase in July and came in well below market forecasts for a 0.3% gain. The decline was driven by a 0.2% fall in service prices, the steepest drop since April, largely due to a sharp 3.9% drop in the margins for machinery and vehicle wholesaling. Prices also declined in the categories such as professional and commercial equipment wholesaling, chemicals, furniture retailing, food and alcohol retailing, as well as data processing services. In contrast, prices edged up 0.1%, the fourth consecutive monthly increase, led by a 2.3% rise in tobacco products. Other notable gains were seen in beef and veal, processed poultry, printed circuit assemblies, and electric power. On an annual basis, the Producer Price Index PPI rose 2.6%, down from a revised 3.1% in July and below expectations of 3.3%. Core PPI, which excludes food, energy, and trade services, also declined 0.1% month over month, missing forecasts for a 0.3% rise. Year over year, core producer inflation slowed to 2.8%, suggesting broader deflationary trends. And those were your international business stories. After the break, do rejoin us for your recap.
Hi, I'm Nielsen Rose, host of Let's Talk Stocks, reminding you that health is indeed wealth and time is really money. Why not spend a little time with us? Weekday mornings, 9 to 9:30 a.m. for your daily dose of business, economic, and investment insights.
And now to recap our top stories. VMIL targets regional growth, digital assets in 2025 strategy amid flat markets. Regionally, IMF warns Curaçao and St. Martin revenue reform and risk management key to sustainable growth. And internationally, U.S. mortgage rates dropped to 10-month low on Fed cut hopes. Those were the stories making today's CBX Evening News. On behalf of the entire production team, I'm Rochelle Moncrief. Thanks for watching CBX, your region, your business, your source.
Hi, I'm Gabrielle Grant Gilpin Hudson, attorney at law and partner in the law firm Grant, Henry & Rooms. I'm also a realtor and first vice president of the Realtors Association of Jamaica. You're